We have a lot to cover today, but before we do, JP Morgan has teams to support you at every stage of your growth. As former founders who have worked in local markets themselves, the bankers at JP Morgan bring deep sector knowledge and lived experience to their clients. JP Morgan can help you navigate complexity with confidence, backed by real-world insights and an entrepreneurial perspective. Get what your startup needs now at jpmorgan.com/grow-without-limits. JP Morgan is the bank of the innovation economy. And welcome to the Tear Sheet Podcast, where we explore financial services together with an eye on technology, innovation, emerging models, and changing expectations. I'm Tear Sheet Editor-in-Chief, Zach Miller. And sponsored banking has become one of the most scrutinized business models in financial services. The headlines focus on enforcement actions and regulatory pressure, but behind that noise is a more interesting question. When done right, how do bank fintech partnerships actually expand financial access to people at the traditional system has left behind? My guest today is Anthony Sharett, president of Pathward. Before joining Pathward, he led nationwide pet insurance at Nationwide Bank. At Pathward, his mission is powering financial inclusion through partnerships with fintechs and platform companies. And today we're going to talk about how the sponsored banking model works, what makes these partnerships succeed or fail, and why Anthony believes these relationships are essential to expanding financial access beyond what traditional banks can reach on their own. Anthony, welcome to the podcast.
Thank you, Zach. Thanks for having me today.
As I'm reading the intro, I'm thinking well, that's just a small remit that we're going to ask of you, is kind of summarize sponsored banking and how that impacts financial services. But let's just jump right in. So sponsored banking has obviously been under intense regulatory pressure, consent orders, enforcement actions. And from your seat, what does the current model do well, and where can it be improved?
Well, Zach, thanks again for having me on today's podcast. It's great to be here. What I'll tell you is Pathward's been sort of the OG in sponsor banking. We've been doing this for over 20 years. And, because of that, we've got a lot of experience with this and understanding what we think our partner needs are. What makes sponsor banking good? I think a couple of things. Number one is with our purpose of embracing and enabling financial inclusion and access for all. Fintechs are really trying to do a couple of things. One is they're trying to solve a problem. And number two, they're trying to meet a customer need. And for us, the ability to partner with fintechs to meet unique needs of both consumers and small businesses is really great. And for us, we believe that fintechs are the best, suited for that in the financial services space. So, we believe that these partnerships really broaden the aperture of the consumer wallet. That's sort of number one. And number two, consumers have varied needs. This consumer over here may need a loan to pay for an unexpected expense. This small business over here may need working capital to help grow a business. So, we believe that these partnerships are uniquely positioned to meet the unique needs of both consumers and small businesses. Secondarily, provides optionality and choice. There are over 5,000 banks here in the United States, and a lot of banks do a lot of the same things, particularly if you're a community bank. We're unique. We want to make sure that we are being innovative through co-creation and other things to meet the unique needs to, again, broaden the wallet for consumers.
So if we were to expand beyond Pathward and just look at the market in general, where can we add more value that isn't being added today? Meaning, where do some of these partnerships maybe leave some value on the table?
Well, I think, for example, you take a look at things like earned wage access. Traditionally, if you worked at a company, I know, one of the companies that I worked at very early in my career, I actually got paid once a month. I got paid once a month. And for someone who was young, just out of college, who wasn't necessarily great at budgeting, that was hard. And then,
I remember those days.
You remember those days, right? And then I moved on to getting paid, every other week, which is, I think, how many people get paid. But when you take a look at things like earned wage access, and if I'm an Uber driver or if I'm in a service industry, I work today, I can get paid today. And that really gives people a sense of comfort when it comes to compensation, be able to pay bills and be able to plan and budget. And I think these are the types of unique needs that are missing in today's market. And I think secondarily, unfortunately, we still have a lot of underbanked consumers in the United States, people that can't go down to their local Main Street bank and open up a savings or a checking account because they still do pull credit. And if you have credit that may be checkered, or if you have yet to establish credit, it's still very difficult for some to open up a banking or a checking account. And so, I think there are still opportunities out there for consumers to build credit. And then on the small business side, with credit tightening up, with stagflation and inflation and the macroeconomic environment for small and mid-sized businesses to continue to grow, I think there still needs to be some unique lending needs that can meet some of these early stage and early growth companies so that they can grow and scale their businesses. So I think that, that's where there are opportunities. The last thing I'll say on this one is we've seen the proliferation of sponsor banks crop up over the last 5 to 7 years. I mean, 7 or 8 years ago, there were probably only a handful of sponsor banks that could operate at scale to power fintechs. And fast forward today, there's probably no less than 100 or 125 banks that call themselves sponsor banks. But, unfortunately, some of these new entrants just don't have the risk and compliance framework to be able to support fintechs. And I think that's a real opportunity in the marketplace as well.
It's interesting you mentioned that, Anthony, because actually at Tearsheet, we went through that exercise a few years ago, enlisting basically the sponsor banks. And there were somewhere between 20 and 30, maybe 5 or 6 years ago. So yes, that number has definitely increased now. So I want to double click on what you just said. I know inclusion is a term and an ethos that's important to you guys at Pathward. And I know it's important in general within fintech. A lot of the startup CEOs we have sitting on this podcast talk about, financial inclusion as being one of the impetuses for them getting into this business. I'm kind of curious what it means for you guys, and if you can give some concrete examples, and maybe some partnerships you have in the market today that increase financial inclusion beyond what a traditional bank would serve.
Happy to do that. I think a lot of parents nowadays are sort of smart at the fact that, sports coaches give out participation trophies, right? Trophies where you get a trophy just for participating, whether you win or not. Well, in this space, we actually want everybody to participate. We want everyone to get a participation trophy. So, for us, what I like to highlight is Claire and back to the earned wage access. That's a fintech that we sponsor. They're doing a great job. They've seen tremendous growth over the last 4 or 5 years and the ability to scale. And they work with software companies in the payroll space to allow consumers to get paid in real time, as opposed to having to wait 2 weeks or a month to get paid. And so that is a great partnership for us. One, because they were early stage when we partnered with them, and because of the hard work that they've done on their end and the co-creation that we've done together, we've seen tremendous growth with that partnership. And we've been able to, their product has been able to reach thousands of people to be able to be paid on near time when the work is completed. H&R Block is another example for us. We've had a long-standing relationship with them, and now that we're in tax season, which reminds me, I need to talk to my accountant, but that's a different story. Look, we want to make sure that for those that want to use their tax services, that they have an opportunity to do that, and whether they may want a refund advance or some other product that we offer, whether that could be the Spruce card as well, which is a banking type relationship. Happy to sponsor them and provide a wealth of services to those that may be walking in with them as well. PayPal is another great partner of ours, and we've been a partner with them for years. And as we know, PayPal has done a tremendous job of reaching consumers where they are. Whether that's a payments opportunity, could be a lending opportunity, or just trying to move money from, one place or one person to another. These have been some great partnerships for us, and our ability to be able to use and leverage our risk and compliance framework to support them has really been great.
And you've seen a lot of partnerships over the years, ones that have succeeded, ones that haven't done as well. I'm curious if you can kind of back out for us, like what separates the ones that scale versus ones that don't work? Are there some common qualities there that make for successful partnerships from your perspective?
There are, Zach. Number one, when we try to evaluate new partners, a couple of things. One is we tend to evaluate the people, right? As everything, it always gets back to people, and we want to make sure that we're working with people at these fintechs that have a similar or like-minded purpose as we do here at Pathward, and are going to do things the right way, that understand the risk and compliance frameworks that are necessary in order to lend or acquire deposits or move money, because that's really the three things that we sponsor. Number two, we want to be able to co-create with our partners. How might we be able to innovate and bring new solutions to the marketplace, and to find a gap in the market that is scalable and that gives both parties the right to win. Third, are there multi-threaded opportunities with a new partner? And what that means is, back in the day, we really started out in this payment space sponsoring general purpose reloadable cards or prepaid cards. And nowadays, gone are the days where a partner just wants us to sponsor a multi or a single threaded opportunity. Rather, they want us to sponsor multi-threaded opportunities. So, Zach, that could be, a card product coupled with perhaps a lending or a credit builder product, and perhaps a money movement or a merchant acquiring capability. And so the partnerships that facilitate these multi-threaded opportunities, those are the ones that we're really after, and those are the ones that tend to be scalable.
I appreciate that. And you mentioned co-creation. I'd love to double click on that and what that looks like in practice. Like, are you building, I assume you have some shared architecture that roll out to most of your partnerships. Do you build individually for some of your partners? Like, what does co-creation look like in practice?
Well, we've been fortunate here at Pathward to have been on a sort of a multi-year transformational sort of journey. And I have to give a shout out to our technology and our product teams and our risk and compliance teams for helping us along this journey. So for us, we're proud of the fact that we have a trusted platform, a tech stack that really allows for our fintech partners to plug into our platform for that seamless partner experience. And we are using API connectivity and things that many sponsor banks use. But on the co-creation side, look, we've got technology teams and product teams, and those on our business development teams, our risk and compliance teams, that will actually go on site with a new partner and evaluate a couple of things. One is, what problem are we trying to solve? Is there a gap in the market? Do the parties have a right to win? And then evaluate what technology or product gaps may be present that we need to shore up to make sure that we have a seamless experience, not just with our fintech partners, but for the end user, which could be a consumer or a small business. And so we'll take a couple of days, sometimes multiple meetings, for us to come up with a seamless solution. And it's really a collaborative effort. And so, but we typically start with what problem are we trying to solve, and how do we have a right to win? And that is the intersection of product, technology, and risk and compliance, and of course, our sales and business development teams.
Got it. And as I mentioned in my intro, the OCC and FDIC are taking a closer look at these partnerships nowadays. We know that. Has that changed your approach? And if it has, how has it changed your approach to partnerships over the last 2 years?
Our approach has really stayed the same. Years ago, we went through sort of our regulatory cycle with the OCC, and they really helped us think about how to shore up, certain aspects of our program and our program standards and our risk and compliance framework. And we were thankful for that, because what that did is that gave us a leg up in the marketplace. We could go to prospects and potential fintech partners and showcase our capabilities, our back-end regulatory and risk and compliance capabilities. And, I'm glad that we've seen a little bit of a regulatory wake-up, if you will, around this space. We had so many new entrants, and competition is always good, but, the challenge is for banks that were doing things the right way, that had the infrastructure that was set up, the people, the process, and the technology to be able to facilitate moving, millions of dollars a day. I'm glad that we have sort of a framework that we all believe in, that's trusted, and that we're all sort of singing from the same hymnal. And so I think that's been a good thing for us. Fast forward to today, we are certainly seeing, and it's a little bit unsettled around the regulatory framework. We've got, states that are issuing, special purpose bank charters, but then you have those of us that are regulated by the OCC, and then there's rules that states are promulgating and trying to pass. But, how does that interconnect with sort of the nationwide banking framework? So there are a lot of questions out there that we're all really wrestling with. But ultimately, regulation is good as long as it's balanced.
So we talked about maybe some of the dynamics that separate good partnerships from poor ones. What about sponsor banks? Like, given the fact that you mentioned there's over 100 now in the space, what separates the good ones from the bad ones? Where are the competitive advantages? Who's going to win in this game longer term?
Well, I think, those of us that hire subject matter experts, right? I think that's really important when you think about the different facets of sponsor banking, whether it's legal, risk, compliance, business development, customer success, solutions engineering, technology, and product. The companies that are looking to invest in hiring the right people and training them the right way, and promoting and retaining, that's really important. I think secondarily is that understanding that interconnection between risk and compliance, particularly for us, having a first line risk business capability. I think that those banks that have that, I think that's a differentiator. And I think that co-creation is being able to have a repeatable framework to be able to co-create with fintech partners, whether that's in a test and learn environment, that's extremely important. And then I think, understanding the market, right? Having not just an inside out approach, but an outside in approach. No one knew that they needed an iPad until they had an iPad. And so as we think about the anticipation of needs for consumers and small and mid-sized businesses, those sponsor banks that are somewhat able to do that, I think will have a leg up in the marketplace.
It's interesting. We've had the CEOs of some of the largest fintechs in the space. And one of the things when they look at their growth in retrospect, a lot of them say we should have hired subject matter experts earlier in our growth. Like, they came in from outside the industry and were disruptors, but then they realized at a certain point they really needed to understand the business.
Yeah, I don't. If I'm sick, right, and if I don't want necessarily a knee surgeon trying to treat me for the flu, and conversely, I don't want a GP trying to replace a hip, right? And by
That's
analogy, look, you've got to have subject matter experts that understand the finer points of all of these things. Bank regs can be both complicated and complex. Understanding how to pivot and maneuver and adjust on the fly is really important. And, frankly, there's just got to be a minimum level of expertise to be able to do that, particularly given how fast things are moving. One of the things that we're seeing, Zach, is we're seeing a lot of, sponsor banks think about their technology and their core banking platform. And, there's lots of great options that are out there. But in order to, bring in a new platform and implement a new platform and onboard it and things like that, extremely complicated, right? And complex. And so you've got to have people that understand, how to do this the right way. And so, I think all of these things are important as we take a look at the growth in this space.
So I'd like to take the final minutes we have together and maybe look forward. I'm going to ask you to take out your crystal ball, which I don't expect you to have. But beyond payments and banking as a service, I'm kind of curious what you think the next frontier is for bank fintech partnerships.
I think a couple of things. Number one, I'm surprised that we've gone 18 minutes and we haven't talked about AI. And
now's
so
the opportunity. Exactly. Throw it in there.
I'll go ahead and do that now. And, look, what I'll tell you is at least half of the banks in the United States are likely using some version of AI to either become a more efficient bank, become a more effective bank, or they're using AI in their customer success teams. They perhaps are using AI from a business development perspective, and certainly using AI perhaps to reduce costs and expenses. And so, we have, lots of use cases around AI, and obviously banks have to think about how do they set up the governance to be able to implement AI strategies in a safe and compliant way. So, artificial intelligence, no doubt, is on the horizon. Digital payments is another, and I think the regulatory environment around that, whether it's in Washington or within the states, is still a bit unsettled. And I think until there's a bit of a less of a patchwork regulatory framework, I think people are still trying to figure that out. But we're certainly looking at that, and I think other sponsor banks are as well. And then I think it's really about embedded finance. I can go, I just purchased a car recently. I'm a car guy. I love cars, mostly classic cars. But, look, when you go to a car dealership, you can get an auto loan. You can get your auto insurance. You can get different types of add-on products. You can get your financing. You can do all of this in one place through one seamless experience. And, as I think about embedded finance, and there's lots of use cases and ways that that's happening here today. Sponsor banks and fintechs are looking how can they make the experience for consumers and small and mid-sized businesses as seamless as possible. And so as we think about how to embed solutions through a trusted platform, with our partners, embedded finance is certainly here to stay, and it's probably a little further along in Europe than it is the United States, but we're catching up. And I think as we think about rules and regulations that will enable more seamless solutions, I kind of think that's the new frontier.
I guess as a corollary to that question, I'll end on this question. Do you see a few years from now the fundamentals of the sponsor bank model changing, or do you see it more just as a maturation process? Or maybe it's both.
The word that I like to use is evolving, right? I don't know how much of it's going to change. One of the things that we've seen is when entities that are not banks try to be banks, many find it to be very
doesn't
difficult.
End very well. Yeah.
It doesn't end very well. Then they have to come back to using a bank. And so I see the landscape more evolving than anything else. And I think the sponsor banks and the fintechs that collaborate and work together to try to anticipate where this evolution is going and understand, and actually being a participant in the process, right? Sometimes, the best way to participate is to educate. Mm-hmm. And I think there needs to be a continued and renewed focus on educating all key stakeholders, whether that's people that are in the market, fintechs, banks, lawmakers, regulators. I think there's got to be a fair amount of education about the art of the possible, because that's really, Zach, what we're talking about here today. That's why being in this space is so exciting. When I think of sort of where sponsor banking was 20 years ago to where it is today, I'm not sure that any of us could have anticipated the evolution. And so I think another 15 or 20 years, it's going to be even more dramatic than it has been for the past 20 years. And so I think for those sponsor banks and fintechs that understand that this is a journey that may not have a destination for a really long time, I think those are the partnerships that are going to last, and those are the ones that are going to thrive.
Anthony, I've enjoyed our conversation today. Thanks for joining us on the Tearsheet podcast.
Thank you for having me.